Hey guys, what's going on? It's Rekt Capital and welcome to this video. We are on the cusp of a new bull market for Bitcoin. Very exciting times as Bitcoin is breaking the downtrend as we speak. We've seen this happen in the past before, which has always led to a favorable result sooner rather than later in the Bitcoin uptrend. Historically, we tend to see these macro downtrend breakouts 366 to 396 days before the upcoming halving. So right on track, right on schedule. It's right on time that Bitcoin is breaking beyond this macro downtrend this March. And so we're going to be talking about this breakout in a bit more detail in today's video. So feel free to subscribe to the channel for more videos like this in the future. Let's dive right into it because time-wise, definitely on track. Historically, about a year to 396 days before the halving is when we see a breakout, and we're bang on that time, really. And not only time-wise, but price-wise, we're preparing, positioning for price expansion and trend acceleration to the upside. And now the only question really is, do we get a 2015 like scenario like this where we see a monthly candle close beyond the macro downtrend, see a pullback, and then a retest of that macro downtrend as a new support? Or do we just confirm the bull market and rally towards the upside without looking back? Because trend continuation becomes confirmed in two steps. One of those steps being the monthly close beyond this macro downtrend, and the second step being a technical retest attempt of that old resistance, that is the macro downtrend, as a new support before confirming trend acceleration and trend continuation. So confirmation comes in two steps. We got that here, we didn't get that here. So it's a 50-50 chance of seeing a retest this time around, and a 50-50 chance of seeing just trend continuation without any pullback. So that pullback essentially is going to be one of the very last times that we dip into the mid-lower 20Ks, and that's going to be the last dip for a long time. Because historically, whenever we see a breakout, then we see upside for a few months, and then we don't really see those prices within the same year, really, because this was 2019 going into 2020, and of course in March 2020 did we only see those prices again. So based on this example, we didn't get any dipping and only got a massive retrace caused by a black swan event in the following year. So we had to wait a long time to get those prices, whereas here in the short term we got that retest in 2015, but then we never got those prices again. So in some way you can think about it this way. Either we get something in the short term, we get that dip in the short term, and then we won't get that opportunity for lower 20Ks later on, or we break out, don't get a short-term dipping opportunity, but might get a retrace in the next following year. So let's see how that plays out. That's just some of the things that I've been covering in the recent deep dive that I launched and released yesterday. For deep dive subscribers, feel free to sign up to the deep dives in the link in the description down below if you want to learn about game-changing recurring principles around the Bitcoin halving and how Bitcoin tends to behave prior to the halving, because those are loads of interesting tendencies that we can extrapolate into the future. Lots of interesting steps, because that's also something I distilled into 7 key actionable guiding principles and technical steps that you can use in your investing. But we also spoke about the BTC 4-year cycle in so much more depth, so feel free to sign up to the deep dives in the link in the description down below. Lots of great feedback about those sessions. I'm just going to cover very briefly and not as in depth in today's video. This is going to be a short video. In deep dives I spend 30 to 40 minutes on these concepts, whereas in an 8-minute video like today, I'm just going to very briefly talk about those concepts. And this is a general 4-year cycle. End of the bull market, strong upside, bull market ends, and then bear market here, retracement, bottoming out candle, trend reversal, and then a new 4-year cycle. And then we have that exponential upside. Bull market ends, bear market begins, retracement year, bottoming out candle, and then trend reversal. And then once again, we're now in a new 4-year cycle, of course. Bull market ends here, bear market retracement, bottoming out year, and of course, candle 4 and 1 still lie ahead. But we have, of course, rebounded from this green area here. Typically, where the candle 3 opens is roughly where the bottom is. So the bottom being in is quite strong. That probability is quite strong. Many will argue for a downside wick rather, which tends to happen earlier in the year. So in 2015 that happened in January. Here that also happened in January, I believe. So it's now almost April, so we might not get that downside wick. But in any case, what I want to just mention here is that we are breaking the downtrend. We are still in that bottoming out year, and still candle 4 lies ahead in the future, which is going to be a trend reversal candle. So lots to look forward to. Candle 4 being the halving year. So May 2020, candle 4, and 2016, candle 4. So 2024 is also going to be candle 4. And you can see here, April 2024 is the halving year as well. So it's interesting how these 4-year cycles are essentially shaped by those halving events, essentially. And during the year of the halving is when we see a trend reversal and strong upside. That's a confirmed bull market. Here it's a confirmed bull market as well. And that's going to be a confirmed bull market in 2024 as well. But before we get then to that point, we have to form a solid foundation and have that initial rally, that initial pump in the bottoming out year. Initial rally and pump in the bottoming out year. And that's what we're seeing right now. So we're building a solid foundation in preparation for the next candle 4, which lies ahead. So solid foundations are being built right now. Lots to look forward to. Candle 4 and candle 1 still lie ahead. And there's still probably going to be some upside left in this candle 3, as we've seen in the past. Some upside wicking is definitely going to evolve in this year. So once we rally to whichever price point, we'll probably see a rejection there to form that upside wick. And so lots still to look forward to. Some overextension towards the upside still this year, but generally lots of upside still ahead in the form of candle 1 and 4. Of course, candle 1 seems to be diminishing in returns over time, as you can see. So we're going to probably see the same thing evolve going forward. Candle 1 is going to be not as much as the most exponential trend move, but more like the ending of the exponential trend move, which could now be candle 4 becoming a bit more exponential, as we're seeing in comparison to the previous cycle. In any case, this is just the surface of what we touch upon in the new deep dive, which I released yesterday. So feel free to sign up to the deep dives in the link in the description down below. I hope you enjoyed this video. Feel free to leave a like if you did. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.